Hey, folks, it's good morning now. Hey, I got a quick story to tell you. Hey, William B. Thompson of Bridging the Gap. You know, normally my host here, I'm the co-host type deal. He's gone, man. We were about to film this episode number 40. He gets a phone call, so he's out there closing a deal. And that's what it's about when you learn to build relationships. It's early in the morning. He's closing out a deal, but he'll be back for the next episode. Hey guys, in Bridging the Gap, we're always about taking old school concepts, that's me, new school concepts, that's Counciel, and showing you how to bridge those things together. Today, I simply want to talk about paying off your house fast. Now, the bottom line is, for most people, there are a few exceptions as to why you may not even want to buy a house, but very, very rare. I'm a big proponent of buying a house and buying it on sale. And not only buying it on sale, but getting it paid off early. Hey, William, what do you mean by buying it on sale? You know how you read about all these real estate gurus that are actually buying property and flipping or buying them way below market value? Why can't you buy your $300,000 house for maybe $175,000? You can do it. So that's the mindset I want you to have. Is not only do you want to do real estate investing to flip, to wholesale, etc., but you also want to learn how to buy your primary residence on sale. Okay, William, why are you pushing about buying on sale and paying it off early? Very good question. Number one, folks, plain and simple, it increases cash flow. Bottom line. I know my mortgage payment is only $1,065. We put a lot down on it. Hey, pay it off. Guess what? That's another $1,065 per month into my pocket, our pocket, so we can buy more assets on sale. The other component of that is it protects my future. And it's a great inheritance for my child. See, if something ever happened to you, and let's say you had that $2,000 house payment or that $1,000 house payment, if it's paid off, guess what? That's one less bill you have to worry about because, yes, they will come and get your house if you don't pay. And also a book I enjoy reading talks about that a good man leaveth an inheritance to his children. And then later on in that book, same chapter, it talks about how houses and riches are the inheritance of the father. So I'm all about count your young'uns that you got. Count your young'uns. And every one of them, I want to challenge you, men particularly, to make sure that you get a house on sale for them and you pay it off fast. I think the second reason is it's one of your biggest assets. Now, no doubt about it, it used to be a time it was going to be the biggest. Old school said it's the biggest. In this generation, it's not even my biggest, so it probably should not be even yours. Let's say if you do have a house, $500,000, it's paid off. That's good. I'm proud of you. But I want you to grow a business, as we talked about before, grow a business that's valued at more than that $500,000. That's right. Have an investment portfolio, equities, that's worth more than that, as well as even have a portfolio of rental properties that's worth more than that. And the way things are going now, folks, you may have some what's called an intellectual property that because you have maybe 100,000 or 500,000 followers on a various platform, that is probably going to be bigger than the value of your house. But be mindful, when that house is paid for, it becomes a full asset on your balance sheet. It helps your net worth, but it also produces positive cash flow for you. And here's something else I want you to keep in mind too. You're probably thinking, what about the tax benefit? Guys, forget about the tax benefit. What? I know your CPA, your tax person says that you need a mortgage for tax deduction. Guys, they're lying to you. Imagine that you pay $12,000 a year in interest on your home. Many cases, you may be in the 15% tax bracket. If you are in that bracket, if you take 15% of that $12,000, you get less than a $2,000 tax deduction. But even better, with the standard deduction, folks, nearing $30,000, right now, 92% of Americans, you cannot or you do not deduct your mortgage interest or your property taxes. Never stay in debt for the deduction. I'm going to say it again. Never stay in debt for the deduction. I'd much rather have in my example that $12,000 per year positive cash flow. I'll give the government their $2,000 taxes. What do I have left? I still have $10,000 of positive cash flow to do what? To buy more assets on sale. Also, so William, what do you now do? Your house is now paid off. So what in the world should I now do to leverage the asset? And this is what I recommend doing. Get a line of credit. That's right. Remember the principle. You should only borrow when the return is greater than that which you borrowed. Meaning, I got this $500,000 house. Why wouldn't I go out and get a line of credit against the house? Let's say $300,000. Money is cheap today, folks. It's cheap. So now I have a paid off house. I have access to $300,000 in my example. Yep, it's what Joe and I have done. And now in turn, when I see a deal, I now can simply write a check out of that equity line and guess what? Do the deal and flip it. Sure, it's collateralized against my home, but you don't just want to let your house sit there. Sure, it's appreciating in value. That's tax-free. But you want to leverage the equity to do what? To help you buy more assets on sale. Yep, that's old school concept, guys. But if you're going to build generational wealth, you must have old school, new school that allows you to live in a place you've never lived before. So finally, all right, Thompson, give me some basic ways to pay my house off. Let me give you 6 basic things to do. Here they are. Number 1, you can pay your mortgage what's called biweekly. All we're saying is, let's say your payment is $1,000 a month, not counting escrow. You would simply pay $500 every 2 weeks. So on the 1st, you'd pay $500, and then like on the 15th, you'd pay $500, and then on the 1st. And a couple of times a year, you'll end up paying $5, $5, and $5 again. That normally takes a 30-year mortgage down to about 19 years. And or you can pay extra principal, meaning your mortgage is $1,000, principal and interest. Pay an extra $100 to it. Again, that extra 100 could possibly take a 30-year down to about 23 years. Third one, pay next month's principals. I like this one. Get what's called an amortization schedule. Again, very simple, folks. And if you look to see that your first payment is $1,000 and you notice that little bitty number, it's called principal. It may be $50. Go down to payment number 2, which may be 51 principal, and payment 3, 53 principal. So you may go all the way down the first year. And notice the first year I've paid $12,000 total. But of that $12,000, maybe only $600 principal. The other $11,400 is interest. So if I simply paid an extra $600, you know what happened? The extra $600 in the next month's principal. I've just reduced my mortgage by 1 year. By paying an extra $600, I reduced my mortgage by a year and saved over $10,000 in taxes. Hey, number 4, reduce your rate by good credit. Folks, rates are still low right now. You'll be amazed if you tweak your credit and maybe got it from 720 to maybe 775, you could possibly save a full point. That's going to bring it down. Another thing, number 5, is look at a 15-year mortgage to get started. Look at a 15-year mortgage to get started. And one of my favorite ones is the combo plan, guys. You can get a 15-year mortgage. You can reduce your rate. You can pay next month's extra principal, and you could put it on biweekly. Now, again, it takes a little work in doing that, but it's all possible whereby a 15-year mortgage could be paid off in about 6 to 7 years. You got it? Well, all right, folks, you heard a lot of old school stuff on today. But again, lesson 39 of podcast 39 was dealing with that new school stuff. And we're going to be dealing a variety. But remember, my name is William V. Thompson, Counsel Glenn's co-host with me. He's out doing a deal this morning. But understand, we're about bridging the gap. Like, subscribe, share, and tell the world about how you're bridging the gap to your destiny. Good day and God bless you.